Welcome aboard, traders, to a new session of Chop Fest. What a chop, Len. Jokes aside, everyone, welcome aboard to another session of charting across the board. Today, once again, trading in the zone. The more I trade based on day trading is a reminder as to why I'm a swing trader by nature. Maybe if I was young, conditions will be different. However, nearly 40 years old, 39, it's a different vibe being in the charts, in and out, like a nightclub in Amsterdam, as we mentioned yesterday. That can be potentially riskier, as we do know that the harder we party, we will see the consequences later on in life. In a similar context here, applying that analogy into the trading application, into the daily time frame, there is many opportunities. It can be exciting. However, it can be also very risky if you do not apply a proper risk mitigation measure. As you guys can observe, we are still within the range, within the chop fest, the range of this PRZ, of this W formation for a bearish bar pattern. That was an opportunity at the lows. Back then, we're following this movement pretty much since Friday or Thursday of last week for the major shark turning into a 5-0. The support, for those unfamiliar, were found here, the 50% correction of the previous move, okay? There are new variables in the price action. I would like to go over and present where this price action may go to. Okay, we do know the conditions are here, a W formation on the hourly time frame, therefore potential turning point, profit taking levels for the longs of this 5870 region, the support that was found for this W formation. Okay, this is why trading on a daily time frame can be, once again, very risky. You need to know your levels, exit positions accordingly. On the hourly time frame, considering that this W formation, okay, we're gonna go over the levels. What do we have here in this segment of the move? Okay, this range. This chart was previously based on a projection based on the hourly time frame. Okay, that was the idea I had before for June the 2nd. Today's June the 4th or the 3rd. I don't even know. Yeah, 2 days ago, June the 4th. Will the force be with us today? Technical proposition or charting application and projection I had before. If breaking the neckline, the projection from those lows, if the support was indeed found at these levels, projected zone I had before was 59.75, 59.90, all the way to 6,000 as a previous value area high, or the previous high from last week highs. Okay, we are currently within the same range, bouncing in between the 0.886 and the 0.786. I executed a short position earlier yesterday. Then I re-entered at 59.84 and exited at 59.68, I believe. It was the first drop we experienced yesterday around 2 p.m. or so. However, at the moment, I am flat. I have re-entered another position earlier today. Okay. And I'm going to explain what or why I entered those levels here. Okay, keep in mind that the W formation on the hourly remains here. We do know that there are resistance levels at the 0.886. However, if we go to the 100% at 6,000, can that be possible? Yes, but as I'm moving accordingly based on minor time frames, in this case on the 15 minutes, I like to portray here the levels I had earlier this morning. I believe there was some news before, but I was unaware of the news. You guys know, to me, that's all noise. I look at the patterns in the chart, and also I like the confluence here with the market profile. It's also telling me that buyers and sellers are agreeing in value, right? There is no rush to break higher. Conversely, there's no rush to break lower, at least for now within this segment of the move. You guys can observe that we have a trading range starting on the 15 minutes once again. So if I go into that time interval, okay, what I saw earlier in this segment of the move, reason why I took another short at the previous test, 59.95, exit already that position. I am flat at the moment, no positions, and potentially I won't enter any trading position until we break this range. I'm gonna explain why, okay? Here in this segment of the move, of course, in hindsight, it's easier to see a bearish butterfly, another W formation that was tested at the 1-272, okay? The first reaction. There was a butterfly at these levels that was based on this chart, okay? 59.97, that was the first test. That was earlier in the morning. I did my homework prior to the execution, but again, day trading can be quite intense. You have to be there on and on your trading desk. So therefore, if you choose this path, absolutely, this is up to you. I will keep taking trades here and there, but it can be quite extensive. I've been taking 4 trades already, and it's been a lot. So therefore, execution 1-272. We do know that the harmonic framework presents the first rejection, known as a type 1, meaning testing the 1-272 will create the first correction. I did not know there was some news today. I believe there was some non-farm payroll news. I'm not sure if it was positive, negative. I'm assuming it was negative at the first reaction. However, this one was my execution. Took the trade, exited, top with trailing stops. Okay, 59.85, the previous short. And now I'm completely flat after the second retest. You guys know that after the first test of the PRC, the potential reversal zone, this is known as the reactionary move, the first test. Considering this chart or this pattern is based on the 15-minute time frame. Reactionary move known as type 1. However, buyers came in extremely absorb the entire selling pressure with another retest of these highs. Is always possible, okay? Which indeed occurred earlier on. The first reactionary move, I was in profit, top at 50.95, the previous execution also from yesterday, retesting, and then another correction. However, here you guys can observe that we're buyers at these levels. I thought maybe we could go lower from these levels, but now that we're ranging, this is where the market profile is telling me that there is more information going on within these levels, which is markets are in balance, equilibrium. Buyers and sellers, once again, are agreeing at these levels. So far, this can be also a long execution. You guys know that, I'm not sure many of you are familiar with market profile. It's something I've been only recently adapting into my charting application from Harmonics and conventional technical application. I'm adding market profile. Why? Because I like to see the confluence with volume, okay? And here, as of now, earlier on, this formation here, market profile also present shapes within the volume or the TPO, the time price opportunity, that they are printing here in this segment of the move. So I'm gonna remove here the volume profile and leave the market profile alone, okay? Maybe on the 30 minutes, it's more of a D letter. Okay, yeah, it's more of a D. You guys can observe here, it resembles the formation of a D point or a D letter in this case, which indicates equilibrium, okay? Potentially more with this shape. Make a curve right to the lows. Just gonna observe is a D point. You're just gonna make a research and look what this imply when there is a P formation, a D formation, or a V formation, B as a void. That can also be a letter capital B or lowercase v. As of now, this is more of a D. Therefore, this is telling me that buyers and sellers are agreeing here. Therefore, we have rather a trading range on the minor time frames. Okay, there is no major turning point. This is normally also very common within the harmonic framework. where we normally only experience a harmonic pause before the resumption of the upward traction in this case. Okay, remember the main chart is on the daily or the hourly time frame that we are testing as of now, ranging in between here on the bigger time frame, on the hourly. I would like to see at least a candle close below the 0.886 based on the 4-hour time frame. And then of course, if we break lower than the 0.786, we may go lower. However, since we have some sort of equilibrium in this range, I would also pay attention to the next support, okay? The next support will be if we decline from these levels. I would anchor the Fibonacci retracement levels from these lows at 59.09. That was, I believe, yesterday's low. Okay, the support that was found, and depending if we pivot either at these levels, 59.87, I believe, was the highs. I would pay attention also to the common areas of retracement. Okay, in this segment of the move, at the 0.382. The 0.50 and the 0.618. Ideally at the 0.618, but also pay attention to the 0.50 if we correct from this pattern, the hourly time frame, find support and maybe head into that retest of the 6,000 region. Why these levels are also important? Once again, if I look at the TPO chart, the previous trading range, I believe, was on the 30-minute time frame. The previous day, there's another information that I can observe here. This one right here on the trading session from Monday, okay, resembles a P shape, okay? It's also another data set that implies that shorts are covering. Therefore, if we find support at the 0.50 or the 0.618, that will be another key variable to monitor in the event of retesting the previous value area high, okay, from Monday. That was previous structural resistance. You guys know any retest could become a new support level, okay? Only if we find support here, I would then switch from the shorts to long, okay? Previously, another long to short. It is extremely intense. I haven't felt this adrenaline in a long time, but I understand the fun part of day trading, okay? But again, be cautious with any trading approach that you may consider, swing trading or day trading, okay? So therefore, if we find support either at the 59.54, if we manage to have a correction either from these levels, I will pay attention to that support level, okay? Before maybe potentially heading lower. As of now, what we are experiencing is a trading range where normally prices tend to bounce on the extremes. And the way traders trade, this is fading the extremes. Basically the lows, the value area low, okay, where the previous bounce occurred on the 15-minute time frame, and now resistance at the upper range. So this is where traders get chopped out. This is what I mentioned. This is chop fest. Extremely intense. You can take opportunities, of course. At the highs, you fade the highs, you fade the lows, but we never know when will this price action exit this trading range. If we break higher than this trading range, we have also the measure move of structure. That can be another potential argument for traditional charting application. If we break any higher, we then have the measure move of the structure. That will take us potentially to the 6,000 region, okay? That will be at 6,020. If we break below, or if we break below, we have a retest of that previous value area high at 59.50. That can be a considerable amount of points to take, okay? As of now, I'm feeling exhausted only trading this range. I might take the day off after and maybe see if we have a new information tomorrow or so, okay? Or heading into the weekly session close. If we break any higher, you guys already know that there are pending levels on the daily time frame, and this is where my focus also is or remains, on the major W formation or pending W formation in this case for the bearish bar pattern. Same variables on the hourly time frame are the same one that are still pending on the daily, okay? And there is one ratio we mentioned yesterday also, that is the 0.886 for the pending completion point of this, once again, pending W formation from the highs to the lows, back to the highs, back to the lows. We tested the 0.786, ranging in between. The first test was a 4% decline. Can we fully test the 0.886? It wouldn't surprise me. Therefore, I'm being cautious at these levels. Cautious in a sense that I'm taking shorts and longs on minor time frames, but on the daily, there is a pending larger formation. The momentum indicators on the daily suggest that there might still be more upward trajectory. So therefore, a 6,000 region, even to 6,100, would not be a surprise. So be mindful of your own levels depending on what you're trading, okay? Once again, moving back into day trading, the 15-minute time frame, I will potentially wait until new information develops, okay? Ideally, I would like to exit this trading range to avoid more choppiness. So far, sitting on the plus side of the trading session, therefore I'm in profit, but I wouldn't risk much at this moment. I like to always trade with the house money rather than risking my own capital. Therefore, I believe I might take the session off and wait until new information emerges, okay? This is what I wanted to present in the price action for the S&P 500, okay? There is really not much for now until something changes on the hourly, okay? The hourly, you guys can observe, we have our major pattern still ranging in between on the hourly, but I'm also aware that a retest of the previous high can be possible. Therefore, please do not take as any financial advice, but rather an information or a technical information based on the data set that we perceive in the chart, applying harmonic ratios. Everyone, I'm exhausted. You guys can tell my brain is not coordinating properly, so therefore I'm going to take the day off, the rest of the day off, of course, until something triggers. I'm gonna execute another position. We will see. So far, trading range, mean reversion, people or traders are fading the lows, fading the highs, trading the range. I do not necessarily like trading ranges, but could this be a distribution based on the Wyckoff schematic or reaccumulation? We will see, my friends. Everyone, I'll see you guys on the next one. This is only a brief trading session or live session until the next one. I'll see you guys on the next one. And remember to live a life with an attitude of gratitude, 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 gratitude.